The dollar yen gave us the opportunity to scoop up some low-hanging fruit with a long into the 109.95 area. This wasn't a inflection zone setup per se, but more or less an opportunity to fade the what was the low end of this range and this very clear trendline support. Had we broken below this trendline support line, we were able to stop entry into a short for a move for 100 pips lower. However, the 109.55 area held. It held its prior lows here at the 109.37s, and that proceeded to be a launch pad for us into an upside target towards the 110.99 area, the 111 handle. So that's the 100% upside projection from this range. If you take its widest point, project that from where the ending of this triangle or sideways price action, what was range-bound price action, when you project it from that end, you get that upside target area, which the market obviously rallied quite strongly into. Now, the important thing for us to note is that the dollar yen is now running into resistance and our original inflection zone that has continued to take this market lower over the near term. Drawn from the 115.97 low here to lows. The original 50% short traded in a corrective wave structure off of the 111.75s. That was the last big short we had in the dollar yen. Traded to the 105.60s. Now, same anchor, new low. The dollar yen has now traded into that resistance zone here in the near term. Alright, so continuing forward here, we need to be aware that that larger 4-hour setup and the resistance zone here on the 4-hour time frame is coming into play. And we need to look for where potential support has brought us up off the low. So we went into same anchor, new highs. At this point in time, I don't hate the idea of being a seller of the dollar yen. We want to see this market turn over. This is the area in which we expect it to. And so we can actually get price that is slightly better now than what the opportunity we had at the 110.75s, which is the technical 50% retracement short that we will be looking for. So we can actually be sellers in this little rally off the lows here in the short term today. I'd like to see one little push higher, but for all intents and purposes, being a seller here at the 111.15s. Stops are going to have to be all the way up at the 112s. First targets are going to be down towards the 109.50s. And this is all for potential swings lower towards the 103 handle. It's a long ways off. It's a big setup. But it's our next in the series 50% short. We got to participate on the long side. We were 50% buyers off the lows. We bought the extension longs from highs to highs. This all took us up. We found this range. We were able to buy the low end of the range for the final burst higher. We've been a part of the entire long trend, and now it's time to take a shot at a potential reversal, because this is a giant inflection zone that we're running into. And of course, if we get above the 112s, now we've really turned this market and things have dynamically changed. But as of right now, this is still 1, 2, 3, 4, 5, 6, 7 swings up off of a low, which is a very corrective wave structure that we're aware of and we're watching at this time.